Well, hello there again, ladies and gentlemen, and welcome back to another edition of the Forex Market Preview. My name is Jason Stapleton, your fearless leader, your host for the few minutes that we get to spend here together every week. And today what I'd like to do is some top-down analysis of a few of the currency pairs that I'm watching right now and kind of show you on different levels what I'm seeing and how you can start doing some top-down analysis in your own trading. Before I get started, don't forget, time is running short. You only have until December 1st to submit your testimonial video to YouTube for us to take a look at. I submitted that video to you not too long ago about the 10,000 trader giveaway. I'm going to invite some of you guys to come to Chicago, and I'm going to pay for the event and for your lodging while you're there. So make sure you watch that video, but you've got till December 1st. We've had some great entries already. I'm very excited, and they've just been said some very nice things. But that's coming up, so don't forget to do that. But let's jump into the charts here and have a look. And what I'm going to do, first thing I'm going to do is shut off my cursor here because I absolutely hate that. And I just did an update to eSignal, my charting package here. And even though I just said that my charting package is eSignal, I can guarantee you that somebody is going to ask me what charting package I use because they do every single time I put out a video. But I'm going to consolidate this chart up here a little bit, and I want to show you guys what's happening. This is the yen on the daily chart. And as you guys can see, we've had this huge upward move. And now, what do we have? See how this market is starting to put in this nice pendant. We call this a pendant formation, and this is actually a bullish pendant, which means that typically this particular type of formation will break out to the upside. That corresponds with what we know about fundamentally about the Bank of Japan saying that they're basically going to do whatever's necessary to inflate their currency. So what we would expect to see out of this is at some point a breakout to the upside. However, if it breaks out to the downside, that's a sell. So whichever way this decides to break out, that is the directional move that we're going to be following, or the bias that we'll have on a lower time frame chart. And again, there's a million different ways to trade it, but I want you guys to be paying attention to what's happening on a larger scale so that you can start to drill down and kind of put your trading ideas together. Now, if we go down to a 4-hour chart, what you're going to see is that there are some other trading ideas that are potentially setting up here. So for example, if I take a look at this X to A leg here, you see I don't quite hit the 618, so that for those of you who are pattern traders, and if not, pattern trader course coming out December 1st, shameless plug, you can recognize that as a potential bat pattern. So we're looking for a potential bat pattern here that is set to terminate at the 886. So, assuming that my computer doesn't freeze up here, we would expect, or we would expect, if the market does rally into this 886 around 100, again, that's the even handle at just over 100, that we may see a retracement out of this particular market. That's not a bad deal. You can actually see right down here underneath of us, what's just played out in here on the daily chart already is an almost completed bat pattern that never actually took shape down here at the bottom. But there is a potential bat pattern here, which could signify if the market breaks out to the upside, then pulls back down into previous structure resistance, there's an opportunity there. But again, even if we just delete our little pendant formation on the higher time frame, selling opportunity here with the bat pattern on the 4-hour chart. Now let's jump over to the euro, and let's take a look at the euro. Again, we're going to go from a very wide view. Now, as you guys know, or may not know, depending on how much you follow the currency markets, had some pretty big news out of Europe. They unexpectedly cut rates, and we saw this waterfall crescendo that happened from about 3,800s all the way down to a lows of around 33, and found support at 33. Now, what's unique about this, if I draw in my line here, I'm going to bring up my, dadgummit, never wants to do what I want it to do. You're going to see this resistance level here and this resistance level here. The market is sitting right on that resistance level, and still we had some bearish momentum today. But this is what's interesting. Although we closed lower on the day, look, we didn't violate. Let me fatten this up. We did not put in a new low. We didn't put in a lower low. So the market was contained within this price action here of this previous day's candle. So all the action took place inside of this candle, and we were unable to make new lower lows. This plays into the fact that we're running into support. Resistance, previous resistance, which should become support right around this area. Now, this is on a daily chart, and you may be asking yourself, well, Jason, I can't absorb the risk of having stops below 31. That's just way too wide of a stop for me. But let's go down to the 60-minute chart and take a look at what's happening there. What's really interesting about this is this market declines, and we put in a beautiful double bottom. Take a look at the RSI. RSI showing bullish divergence here from the initial test to the retest. There is an opportunity here, guys, to potentially get long on a very significant retracement. I mean, we could retrace to 36s and could even retrace all the way to 38s. This could just be the retracement that sends the euro higher. It all depends on how people end up reading this market. But you've got an opportunity here. If I drop it down to the 60-minute chart, again, stops below 130 or the 133 handle, and potentially a very, very nice up move back up into 136s, 137s areas. So you've got a nice little rally here that could potentially exist out of there, and that's a great way to use your higher time frame on the daily chart to determine, okay, where are my key levels of support and resistance? Where is the market likely to find a reversal point? We're basically oversold here at 21. Could we see a rally out of this? Yeah, I think we could. We've had a nice, also, if you guys will notice here, I wanted to point this out to you, a nice one-to-one harmonic move here up into that resistance level, and once we hit that harmonic move, market reversed on a dime. Pretty significant there. That's actually one of the things that we talk about when we talk about harmonic moves and discussing structure and where markets are likely to terminate, all those types of things. This is one of the main things that we look for, is this harmonic move into structure. Now, there was no structure here, but certainly as this market falls back, we're sitting on about, it looks like a 618 and a 382 retracement. So if I go ahead, let me just fatten this up a little bit so you can see it a little bit better. All right. So if I'm drawing from this leg of the move, the retracement, I'm coming into the 618. If I'm drawing from the base here, I'm going to come in at about a 382. So we've got a 382 retracement and a 618 retracement depending on which leg, depending on whether I'm taking this leg of the move or whether I'm taking the entire leg of this last up move. So a lot of key indicators telling us that we may see a rally out of the euro into next week. Again, easy way to do it is on that 60-minute chart. The double bottoms, just if you're, if they get underneath those double bottoms, take your losses and just get out. Now, here on the other hand, we got something really nice here on the pound dollar. This is a great, this is the last one I want to show you today. A great example of same basic principle here, but the pound didn't get the rollover that the euro got. So we've got this nice move up, nice harmonic move. Market pressed up, but then we've met with some consolidation. There's no patterns in here or anything. We've just got a nice level of resistance here and support here. And all we want to do in a situation like this is wait for the market to break out. If I go down to the 4-hour chart, it doesn't get any better. We don't start seeing, if I come down to the 4-hour, I can find an advanced pattern to trade in here or something like that. It's not, we don't get that lucky. All we've got is a very wide channel between 6240s and 5900. So very wide channel in here, and we've just got to wait for that thing to break out before we can check market direction. But again, it's no different than the euro trade. It's just in this case, we didn't get the resistance. Harmonic move is still up, we just have to wait. We just have to wait and see what happens with it. So anyway, euro trade there, potential yen pattern trade. I can spend a lot of times and run through the other charts with you, but I just wanted to do something brief. I actually have to go to, by the time this video is put out, I will be on my way to Vegas. I have a meeting there. I'll be there just for a couple of days, and then I'll be back here in Kansas City. The Advanced Pattern Trader course, the condensed course that just teaches you the patterns that I trade and and the rules for trading those, is still scheduled to come out December 1st. I've been recording the videos here in my home studio for the past week or so, and I'll be getting those edited down and into a very nice packaged up course for you guys here in the next couple of weeks, and I'll have that out to you. So be on the lookout for that. You can email Darren if you want more information and you want to be notified immediately after it gets put up. So other than that, thank you guys so much for watching. Make sure you leave me a comment, share this, and subscribe to the YouTube page because I've got great stuff coming into next year that you're going to want to be a part of. Till next time, guys, good luck, good trading. I'll talk to you soon.